If you have money sitting in a Chase, Bank of America, or Wells Fargo savings account right now, I have some bad news for you. You are being robbed, not figuratively, legally, every single day. The average American big bank pays you 0.39% interest on your savings, but the bank is loaning that exact same money out to other people at 7%, 9%, even 24%. They're keeping the difference, and it's billions of dollars a year. In this video, I'm going to show you exactly how big banks are taking advantage of millions of Americans, the simple 5-minute move that could earn you 10 times more on your money, and why your parents, your friends, and probably you have been losing thousands of dollars without even realizing it. This isn't financial advice, this is just math the banks don't want you to do. Let's dissect. Welcome to A Dollar Dissected. Today we're breaking down one of the biggest financial scams happening to American families right now. And I'm calling it a scam, not because it's illegal, but because it's so quiet, so legal, and so hidden that 99% of Americans don't even realize it's happening to them. Stay until the end, because I'm going to walk you through the exact accounts paying real Americans 10 to 12 times more than what big banks pay, with zero risk, zero fees, and FDIC insurance up to $250,000. Let's get into it. Here's what's actually happening. The average savings account at the 4 biggest American banks, Chase, Bank of America, Wells Fargo, and Citibank, pays around 0.01% to 0.45% APY. The national average is about 0.39%. Let me put that number in real life terms. If you have $10,000 sitting in a Chase savings account right now, the bank is paying you about $39 a year. That's 11 cents a day. You can't even buy a piece of gum for what your bank pays you to hold $10,000 of your money. Now here's the twist. That same bank is taking your $10,000 and loaning it out as a credit card balance at 24% interest, an auto loan at 7%, a mortgage at 6.2%, or a small business loan at 9%. So Chase pays you $39 a year for your money, then they turn around and charge someone else $2,400 a year for that same money. That's a $2,361 profit on your money every year, and they don't share a penny of it back with you. Now multiply that by hundreds of millions of accounts across America. That's how Chase made over $50 billion in profit last year. JP Morgan Chase alone reported over $58 billion in net income in 2024. Making it one of the most profitable banks in US history. Bank of America made over $25 billion, Wells Fargo around $19 billion. Where do you think all that profit comes from? It comes from the gap between what they pay you and what they charge everyone else. You are the product. Your savings account is the raw material. Here's the worst part. Most Americans have no idea this is happening. According to recent banking surveys, more than 70% of Americans keep their savings at the same bank as their checking account. They've been there for years, decades, sometimes since they were teenagers. They trust the brand, they trust the building, they trust the logo. And in return, that trust is costing them thousands of dollars a year. Let me show you the real math, because this is where it gets brutal. Imagine you have $25,000 saved up. Emergency fund, future down payment, whatever it is. Most financial experts say that's about right for a working American family. At Chase's 0.01% savings rate, you earn $250 a year. That's it. At a high yield savings account paying 4.5%, you would earn $1,125 a year. Same money, same level of safety, same FDIC insurance. The only difference is which bank is holding it. That's $1,122 in lost income every single year, just for choosing the wrong bank. Over 10 years with compounding, you'd be losing over $13,000. Over 30 years, you'd be losing over $80,000. $80,000 gone. Not because you spent it, not because you lost it, just because Chase paid you 0.01% while another bank would have paid you 4.5%. This is the silent wealth destroyer in middle-class America. Now I know what some of you are thinking. If high-yield savings accounts are so much better, why doesn't everyone use them? 3 reasons. Reason number 1, banks don't advertise it. Big banks spend billions of dollars on marketing every year, but they never market their savings rates. They market credit cards, they market mortgages, they market apps and rewards, but you've never seen a Chase commercial bragging about their savings APY, because their savings APY is a joke and they know it. Reason number 2, switching feels scary. Most Americans believe their money is safer at a brick and mortar bank. But here's the truth. Every legitimate high-yield savings account in America is FDIC insured. That's the exact same insurance Chase has. Same federal protection. The money is just as safe. Actually safer if you compare actual bank failure rates. Reason number 3. Americans are loyal to a fault. People stick with the bank their parents used, the bank they got their first paycheck deposited into. In banking, loyalty literally costs you money. So what's the solution? Move your savings, not your checking, just your savings, to a high-yield savings account today, right now. I'm not going to tell you which specific bank to use because rates change, but I'll tell you what to look for. A real high-yield savings account should pay between 4% and 5% APY. It should have FDIC insurance. Some of the most popular options Americans are using right now are accounts at companies like Ali Bank, Marcus by Goldman Sachs, Discover, Capital One 360, SoFi, and American Express Personal Savings. There are dozens of others, all FDIC insured, all paying 10 to 12 times more than the Big Four. You don't have to close your Chase account. You just open a separate high-yield savings account, link it to your checking, and transfer your savings over. It takes about 10 minutes. It's free. Here's what nobody at Chase will ever tell you. The bank's entire business model depends on you being financially illiterate. They count on you not knowing what APY means. They count on you not comparing rates. They count on you trusting the logo more than the math. Every dollar you keep in a low-interest savings account is a dollar that pays the bank's CEO bonus, pays for their lobbying, pays for their advertising, pays for the marble lobby of their downtown headquarters. You are not a customer of these banks. You are a source of free funding. And the moment you understand that, the moment you actually move your money is the moment you take back power. Now let me give you the brutal truth. Most people watching this video will agree with everything I've said. They'll nod along, they'll feel angry, and they'll feel motivated, and then they'll do nothing. They'll close this video and forget about it by tomorrow. They'll keep losing thousands every year to a bank that doesn't care about them. Don't be that person. The 5 minutes it takes to open a high-yield savings account is the highest paying 5 minutes of your entire financial life. There is no investment that gives you a guaranteed 10x return except this one decision. Open the new account today, transfer your savings, and let your money start working for you instead of for the bank. That's how you stop being a statistic. If this video opened your eyes, hit subscribe. Next week, I'm breaking down how to check for unclaimed money belonging to you. I'm a dollar dissected. Stay sharp, stay solvent.